going to get to this topic of leaks, and I think it's a really kind of a national embarrassment what's been happening. And you've gone back and studied this, and we have an interesting chart or two to kind of walk people through. And then we'll get into more of the macro grind. But I do think this is important to highlight because people are clearly getting information early, taking advantage of it. We're not really hearing anybody talking about it, but market practitioners can see it. To Keith's point, he sees it in his rate signals. He sees it in his VIX signals. We see it in the actual flow of people taking positions. That's 271,000 contracts, short-dated volatility contracts. That's just somebody's getting something, right?
Yeah. So I would say every single this week, every single major report was leaked at least an hour beforehand, which we're seeing in the data. So if we go to this first chart that we posted it's on Keith's Twitter right now, so you can go give it a repost there as well. Make sure to tag the SEC on this one. But let's just start with today's. So non-farm payrolls, that gets reported today at 8:30 a.m. So you would suspect to see that the deceleration in yields would happen at 8:30 a.m. That's what would happen if there was no leak or no leaks happening. But we really believe that the leak happened yesterday at 11:09 a.m. You can see right away at 11:09 is when yields really start to drop. And that's when you saw Keith starting to say there is a leak going on for this non-farm payrolls number. And we also believe that it happened around 7:51 a.m. So really almost 2 days beforehand, we think this one was leaked.
It's almost, just looking at isolating that, it's almost like the leak happened to one set of people and then it happened to another set of people. It's gotten that bad that there's double leaks on the leak.
Literally. So I really think that the first drop at 7:51 a.m. yesterday, before the market even opened, that was your first leak, and then you had the second people came in at 11:09. Then if we go to the JOLTS report that's a Wednesday. That gets reported at 10 a.m. Okay, 10 a.m. you didn't see the drop off. You actually see the JOLTS. The yields, they bottom at 10 a.m. They should be going down if this wasn't a leaked report.
That's on Wednesday?
That was on Wednesday. So really, I think people got that report at 8:54 a.m. Instead of.
So now they've taken the position and profited from it. Now when the news comes out,
they sell it.
They sell the news because it's not news to them because they've had it for an hour and 6 minutes.
Exactly. And then they profit, they wait for the next person to call them up and get the next leak. Let's just go to the ISM data. So let's go to Tuesday. ISM data is reported at 10 a.m. You'll see that we believe the leak happened at 8:21 a.m. Actually. So that's on Tuesday. You can see once again what time does the yields bottom? 10 a.m., almost right on the dot. So everybody already knew right before the event, and then it comes out. This isn't a new phenomenon. This happened last month too. So we go to the next chart. So we start again from the right. So Friday, non-farm payrolls would be reported at about 8:30 a.m. We will think that leak happened about 8 a.m., 7:59 a.m. to be exact. And you can see once again, once it gets reported, that's the bottom. Everything pops right afterwards.
So last month, basically the same series of data, same time frame of leaking, same position taking.
And
I can't get over the 271,000 VIX contracts yesterday.
VIX is almost never the number one traded option ever. And I think it's been almost 1 to 2 weeks now where we've seen the VIX towards the top, and so it's just been.
Okay, but so anyway, this is a major problem, and nobody's talking about it. I don't know what the financial media is doing if they're not seeing this, but we need some accountability in all this.
Literally, I mean, I think it would just be as easy as just look at who made the big trades at this time. I mean, this is the U.S. bond market. To move this bond market, you have to be putting some serious capital. So there's got to be some really big trades at these times. Now let's go to the Thursday. So on Thursday, that would be initial jobless claims in U.S. manufacturing data. So you remember last month's U.S. manufacturing was a pretty big slow in the manufacturing slide. That comes out at 10 a.m. Initial jobless claims was also missed at 8:30 a.m. I think people got both of those numbers at about 8:12 a.m. or so. And on the previous day, you'll see that's at 2:15 p.m. So they got basically a day before the first group of people The next group of people got it at 8:12, I believe. And then if we go to the ADP report, same thing happened again. So that got reported at about 8:15 a.m. I think people got that one at 8:06 a.m. Actually, because that's when the market starts to move. If the market's moving like that, somebody's got something. And if we go to the last slide, this one is a little bit harder to show because non-farm payrolls, that was on January 5th. We all had off on January 4th. I think people had the data on about January 4th because you can see as soon as the market opened on the 5th, you had yields drop again by a significant margin, and yields bottom once again at 8:30 a.m. when non-farm payrolls was reported. So it's been happening for at least 3 months in a row now. I'm sure if I went back another 3 months, it would be the same thing.
Hey there, Hedgeye Nation, or if you're not part of Hedgeye Nation, thanks for watching Hedgeye on YouTube. If you haven't already, make sure to click on the button below there. Subscribe to our YouTube page. You can also follow the link in the description to our website to get even more great investing content.